It started like any other Friday, until it didn't. In just a few hours, $19 billion vanished Cyan from the crypto market. More than 1.6 million traders were wiped out, liquidated, erased because of a single social media post. It became the largest liquidation event in crypto history, and it's left everyone asking the same question. Is the bull market already over? Welcome to the Crypto Loop. And today we're pulling back the curtain on what really happened during crypto's Black Friday. We'll break down the timeline, the geopolitical shock that set it off, the whispers of insider trading, and what all of this means for your portfolio as we head into one of the most uncertain weeks of the year. Before we dive in, this isn't financial advice. It's education, meant to help you make sense of a chaotic moment in crypto history. Now, let's get into it. The build-up. To understand the violence of this crash, we need to rewind. Just days before, the market was euphoric. Bitcoin had smashed new all-time highs above $126,000, and bullish sentiment was everywhere. By Friday morning, BTC was still sitting comfortably above $122,000. But while everyone was celebrating, something was shifting beneath the surface, quietly, politically, dangerously. On October 9th, China announced new export controls on rare earth minerals, materials used in everything from smartphones to fighter jets. It was a bold move, a direct shot across Washington's bow. The next morning, President Trump fired back. On Truth Social, he threatened a massive increase in tariffs on Chinese goods. Almost immediately, the markets flinched. Wall Street's fear gauge, the VYX, surged 32%. Bitcoin began to slip, dropping to $117,000. But that was just the tremor. The earthquake came hours later. Trump sent another post, this time declaring a 100% tariff on all Chinese imports. And in that instant, the crypto market collapsed. Bitcoin fell $3,000 in seconds, then spiraled. Within hours, it had flash crashed to the $14,500, even dipping below $12,000 on some exchanges. In a single day, Bitcoin lost $20,000 in value. Altcoins were obliterated. Ethereum plunged over 20%. XRP, Solana, Dogecoin, all down 30% or more. Cardano, Chainlink, Aave, nearly 40% wiped out. So why did this crash cut so deep? The liquidation cascade. Because this wasn't a normal correction. This was a perfect storm, extreme leverage, bad timing, and failing infrastructure. In the weeks leading up to the crash, leverage had reached record highs. Bitcoin's open interest had exploded past $94 billion, like a skyscraper built on sand. Then Trump's post hit like an earthquake. The timing couldn't have been worse. A Friday afternoon, when liquidity was drying up and traditional markets were closing. As prices fell, leveraged long positions began to auto-liquidate. Each forced sale triggered another, a chain reaction. Billions evaporated in hours. By the end of the day, $19.1 billion worth of positions were gone. To put that in perspective, the 2020 COVID crash wiped out $1.2 billion. FTX's collapse, around $1.6 billion. This, 20 times larger. And the worst part? The very exchanges meant to stabilize the market broke. Traders reported frozen order books, disabled stop losses, and system failures across Binance, Coinbase, and Robinhood. What could have been a sharp dip turned into a full-blown collapse. The geopolitical trigger. Now Trump's post might have been the spark, but this fire had been smoldering for months. The US and China's economic rivalry had been escalating again, this time over rare earth minerals, a vital supply chain weapon. When China restricted exports, Trump saw it as a direct challenge. And, in true Trump fashion, he hit back with maximum unpredictability. But his timing, right as Bitcoin was overleveraged, couldn't have been worse. The crypto market became collateral damage in a global power play. Yet the perfection of that timing, just minutes before the crash, raised some serious eyebrows. Insider trading or pure luck? On-chain data revealed something strange. A single whale wallet on the derivatives exchange Hyperliquid had opened enormous short positions, just days before the crash. Then, 30 minutes before Trump's announcement, they doubled down. When the dust settled, they'd pocketed roughly $200 million in profit. Coincidence? Maybe. But crypto lawyers are already calling for investigations, because in a market this volatile, one early whisper can move billions. Aftermath. The road to recovery. So, where do we go from here? Despite the chaos, Bitcoin held above the critical $100,000 support zone. After dipping below $12,000 briefly, it bounced and stabilized between $110,000 and $113,000. That rebound tells us something crucial. This wasn't a collapse of fundamentals, but a flush of leverage. And institutions noticed. BlackRock's spot ETF reportedly scooped up over 21,000 BTC during the crash. XRP whales added over 1 billion tokens. Smart money bought the dip, signaling confidence that the bull market isn't dead. The crash, brutal as it was, may have been a necessary reset, wiping out excess greed and restoring a healthier base for growth. But not everyone will recover easily. Altcoins suffered deeply, and the so-called altcoin season may have ended before it even began. Bitcoin dominance has surged, and capital has fled to safety. Future rallies will likely be selective, driven by strong narratives like AI, real-world assets, or upcoming ETF approvals for major tokens. The wild card, Trump and the trade war. Now everything hinges on one man, Donald Trump. His trade decisions will dictate crypto's direction in the coming weeks. He's set a November 1st deadline for tariffs, leaving a narrow window for negotiations before the Apex Summit on October 31st. If he backs down, markets could surge. If he doubles down, expect more pain. His first trade war in 2018 lasted 18 months. If history repeats, we could be in for a long and volatile ride. So, to wrap it up, crypto's Black Friday wasn't random. It was triggered by a geopolitical bombshell, fueled by extreme leverage and amplified by fragile infrastructure. Over $19 billion was erased. But the foundation, the fundamentals of Bitcoin and crypto, remain strong. The bull market isn't over, but the rules of the game have changed. If you want to understand how events like this are manipulated and how to spot them early, check out our deep dive right here. And if you want to see where this cycle could still take us, watch our crypto market cycle breakdown next. Thanks for watching. The Crypto Loop. Stay sharp, stay informed, and I'll see you in the next one.